Hey, hello investors and future investors. What the healthcare is going on? For today's video, I'm going to be showing you 4 stocks in the healthcare center. I'm going to go ahead and show you a bit of information on each one of these stocks and show you what stands out. At the end of the video, I'm going to go ahead and show you which one is my choice in order to go ahead and make consistent income. Now, if you're new to options trading, or you're trying to use options in order to generate some additional income to supplement your 9 to 5, then you so happen to stumble onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. And I do that by giving you option strategies and also stocks that could help you grow a small account portfolio. For today's video, I'm going to be going through 4 of the healthcare stocks. I'm going to be showing you how they're doing so far and where the opportunities are in order for you to capitalize and use them in order to make consistent income. Now, you guys know how we do it. We like to go ahead and get down and dirty with option. Our first stock for today is going to be none other than Oscar Health, and that ticker is OSCR. Now, before I go ahead and get into these 4 healthcare stocks, I have 2 requirements from both my viewers and also my subscribers. Requirement number 1, always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. Requirement number 2, always make sure to have an exit strategy before entering any options trade. That way, if the trade do decide to go against you, then you know how to get out of the trade. So that being said, let's go ahead and look up Oscar Health. Now, let's go ahead. I'm going to show you how the stock has been doing up to the year so far. So as of to making this video, is down just 3%. We're going to quickly scroll over to the 1 week chart to see how it's doing. It's down around 6, almost 7%. We're going to go ahead now to the month, and that's down around 24%. Here we're going to be going to year to date, and it's only down 1%, which may be very misleading, because now once we go to the 1 year outlook, you're going to see that is down around 20%. Now, in all 4 of these sectors, Oscar Health is the baby. Oscar Health has been offered for public on 2012, so it's the youngest in all 4 of these stocks. Now, if I go ahead to the max, you're going to see how this stock has been going. So, from inception, from IPO date, once Oscar Health debuted, it just went straight tumbling down. Now, usually when a stock IPOs, it usually goes up for a burst from IPO and then later goes down. This one just went straight down, and I strongly believe is because it's in the health sector. Now, let's go ahead and go down so I can show you some critical information that I'm using in order to make a decision. So, right here, you're going to see Oscar Health is founded in 2012. The headquarters is in New York. For those of you that do not know, I am a New Yorker. I live in New York and also Miami. Now, one of the companies I used to work for in New York City, in Manhattan, they offered us Oscar Health. So Oscar is a real thing. And one of the best things about Oscar Health is that they offer you the insurance through technology platform. So that's going to help them in order to have some very, very good margins. Now, because this stock is still so pretty much young, it has some unforeseen opportunities, and also it also could show a lot of potential in the future. Now let's go ahead and scroll down. Now, for healthcare stock, the majority of them usually pay a dividend. Oscar is so young that it has not even begun to pay a dividend yet. Let's go ahead. We're going to scroll down just a bit more and we're going to see what the trading trends are. So as you can see, Robinhood investors like me and yourself, we started buying Oscar Health. Kudos to you guys. You guys need a pat on your shoulder. Let's go over to hedge funds, and hedge funds are actually selling more than they are buying. Now we're going to go down and look for the analyst report. And I can tell you right now, there's probably no analyst report because this stock, like I said, is very, very new. So the analyst rating, well, we do have that. The rating is a sell, resounding sell. The analyst report, there's no report, so we don't have a fair value for this company. And once again, that's because the company is very new. Now, what I'm going to do is that I'm going to go ahead and show you guys a trick that I use in order for me to make a decision before getting into the stock. So let's go ahead now to trade Oscar options down to the bottom. What I'm going to be doing is that I'm going to be pretending I own 100 shares of the stock. And what I want to see is the ROI, or the rate of investment, before I actually go ahead and do any options on it or buy the stock outright. So let's go to sell. We're going to go to call. And what I like to do is go out for monthly expiration. So let's use August 29th, which gives us 27 days. Now, I like to use a benchmark of around 80%. So anyone that just new to options could use a benchmark of 80%. The closest to the 80% we're going to have is a 79.02. And when I say 80%, I'm referring to the chance of profit. Now, for the 80% chance of profit for Oscar Health, for monthly expiration, you're going to be getting paid 0.70 or 70 cents. So your return on investment is going to be, if you were to buy the stock outright, is going to be the 70 cents here divided by the share price, which is price per share, is going to be 13.53. Once you divide that, you're going to be getting something like 5 point something, which means your rate of return on Oscar Health is going to be 5%. 5% is a resounding wow, hell yeah. Good. So that's just a little trick I like to use to see if it's actually worth getting into the options or getting into the stock. So now let's go ahead to the second stock, and we're going to be doing this stock by order of share price. So the next one on the list is going to be MRK, or Merck and Company. Merck and Company is another one in the healthcare sector that has also been beaten down. I know you see the green right here, but do not let that fool you. Let's go ahead to the 1 week. As you can see, it's down 7%. We're going to go over to the monthly outlook right now, 3%, 3 months, and let's go all the way over to the year. Okay, for the year, it's down around 31%. So the commonality with all four of these healthcare stocks that I'm going to show you today is that they have been beaten down. The healthcare sector is the only sector right now that has opportunity. Now, we're going to go ahead and scroll down in order to see some additional information. Now, the place where Merck and Company stands out is with animal health. That's what separates it from the other three. So that right there gives it a boost actually. Now, if we go ahead and scroll further down, we're going to see it pays a dividend. The dividend that Merck pays is around 4%. 4% is a very, very good dividend. So I need to put that on my list when I'm deciding which one of these four I'm going to choose in order to make consistent income. So we're going to go ahead and scroll down a bit further, and we're going to see what Robinhood investors are doing. Now, funny enough, Robinhood investors are actually selling out of Merck, and let's go and see what the hedge funds are doing. And as you would know, the hedge funds are buying this stock big time. I guess that's cause for concern right here. Usually the two are not that opposite. Now, Merck is a very established in the healthcare, as opposed to Oscar, which is only 2012. Merck has been around for a very, very long time. Let me see how long it's been. I think it's 1891. Actually, Merck is the oldest in all four of these companies. So let's go ahead and see the analyst rating for Merck and Company. So for Merck and Company, the analyst is a resounding buy, 59% are saying buy. Now let's see the fair value. The fair value for Merck is $111. Merck is currently trading at around $79. So it shows about a 40% upside if it were to get back to the fair value. So hence you have a good opportunity right there. So let's go ahead once again and see the options on this bad boy. So let's go to trade Merck options once again. We're going to be doing the exact same thing to see just to get an idea of what our ROI is going to be. So we're going to look for the 80% chance once again. And the closest to the 80% chance is going to be the 81 right here. And that's going to pay us 0.86 or $86. Once again, to get your ROI or your return on investment, you're going to divide the premium you're going to be receiving by the price per share. So it's going to be 0.86 divided by $79.40, and that should give you around a 1%. Now, compare that to the first one we did, which is Oscar. We got a 5% return. This is very, very low at a 1% return. Okay, next we're going to be going ahead. Hopefully you guys are remembering all this information right now, because all of this is going to help me make a decision of which one I want to use in order to make consistent income. So now we're going to go ahead. We're going to go to the third one on the list, which is one of my favorites, which is going to be United Health, or UNH. Now, at this point in time, if you guys are still here and you guys are enjoying the video, now is going to be the perfect opportunity for you to go ahead, like the video, subscribe to the channel. Make sure to hit the notification bell to get an alert when I post a video. And I do post videos pretty often in order to help people trading with small account portfolios to grow their account portfolio consistently over time. Okay, so here we are on United Health, and United Health is one of my favorite. I did show you guys, I have several videos on United Health. I do have this in my portfolio. Now, we're going to go ahead and see how this stock has been doing as well. So as of making this video, it's just down around a 5%. Let's go to the 1 week mark to see how it is. And there you go, 15% down. We're going to go to the monthly chart, 25% down, and let's go all the way to the year. So for the year, this stock is down around 60%. In all four of these stocks I will present you today in the healthcare sector, United Health has been beaten down the worst. So I'm not sure how you see this, but I see it as the best opportunity. Okay, so before we go ahead and see the reports, I want to bring something to your attention. United Health is pretty much the boss. In all four of these healthcare sectors, United Health is the boss in two ways. United Health pretty much has a hand in almost every single thing. And one of the most important thing it has a hand in is going to be government contracts. I'm not sure if it shows here, but the government contracts is going to help United Health stay consistent in making that revenue. Now, the other thing is going to be the dividend. United Health pays a dividend of 3.58. It's not as much as Merck and Company, but it still pays a pretty decent dividend. Now, United Health is the boss I did mention in two ways. The number one way is that it has those government contracts and it has a hand in almost everything. So it's very, very hard to fail. The other way is the boss. It is the biggest market cap in all four of these stocks here. So this company is pretty much too big to fail. If anything bad were to happen to United Health, let's say the share price keeps going down uncontrollably, this company would faster get a bailout from the government than any of the other three that's there, because this company is simply too big to fail. Now, let's go ahead and see the analyst reports and the analyst ratings. So with the trading trends, you could see this. Look at all this green right here. Robinhood investors like me and yourself, we just eating up all of these shares. Kudos to you guys once again. Please go ahead and give yourself a tap on the shoulder. Well done. Let's see how the hedge funds are doing. The hedge funds as well, they buying this thing up as well. So before going even into the last stock, you guys could see, based on the two healthcare stocks I showed you before, United Health has been resounding, have a very big edge on the other two, because people have diving deep into this one in particular. So let's go ahead and scroll down once again to see the analyst ratings. So the analyst rating here is a bit higher than the previous one. This one's at 69%, with the previous one at 59% buy. So the analysts have a very, very good outlook on this. Now, the fair value of United Health is 400. Currently, the stock is trading at around $237. So United Health has like a 45% upside if it goes to the fair value. Now, the fair value is just a guesstimate of what the actual share should be worth. However, United Health has hit a high of over $600. So if it moves right now from the $237 per share to above 600 again, that's going to be a phenomenal gain. And I do probably believe that's why mostly the Robinhood and also the hedge funds are getting into this stock. Now let's go ahead and see our return on investment for this stock. Sell, call, and let's do monthlies. And we're going to look for that 80% chance once again. So the closest one to 80% is going to be the 79.7 right here, and that's going to be 3.65. Once again, just divide your 3.65 by 237.20, and you're going to see that's going to give you around a 1.5% return. Now, 1.5% return is not bad. When I'm trading options, I like to look for my sweet spot of 1.5% and 5% return for an ROI. So UNH just hit the cut, and that's if I'm willing to buy the shares outright in order to trade options. Now let's go ahead and get into the last healthcare stock, which is none other than ELV or Elevance Health. So let's go ahead and open that up now. Now, Elevance Health is, if United Health is the number one, the boss, then I would rank Elevance Health as number two. even if the share price is higher than United Health, Elevance is number 2, especially when it comes to market cap. I think the market cap is like 242 billion, whereas United Health is 343 billion. We'll see that in just a second. So let's go ahead and see how the stock has been doing on the week forecast. 5% down. The month, let's go all over to the year, and this is down 48%. Now, I did mention to you that United Health is down the most in all 4 of these stocks, but Elevance is going to be right there a second because it's down 48%. So, like I said, and I mentioned this before, the only opportunity right now in the stock market, because everything is just priced so high, is going to be the healthcare. So that's why I'm paying very close attention to that. So let's go ahead and get some more details for Elevance. Now, Elevance is a very established company. As you can see, it's founded in 1944, and Elevance does a lot as well. In addition to that, it also offers healthcare via a platform, just like Oscar. Oscar solely does platform, but Elevance gives you the platform and also the regular stuff like pharmacies, etc. So let's go ahead now and go through the dividend. So the dividend is 2.43. Again, this dividend is, I wouldn't say this is good because the one is paying 3.58, which is United Health, and the other one is paying 4.04. So that is way better dividend than what Elevance is paying. Let's go ahead and look at the analyst reports and the analyst ratings right now. So the trading trends, Robinhood, in buying right here, you can see we're buying as well. Let's go to hedge funds. Actually, for this one, it's actually amazing. The hedge funds are actually selling more than they are buying. Let's go ahead and get those 2 important reports. Okay, so overwhelmingly, this one is a buy as well. Most analysts think this one is a buy. And let's see the fair value. Okay, so the fair value is a bit higher than United Health. I did mention United Health is the boss, and Elevance would probably be number 2. United Health fair value is around $400, whereas the second in command, the fair value is 507. So Elevance has a even bigger upside than United Health. So let's go ahead and see if the option is paying decent. So once again, we're going to do the exact same thing in order to get the feel of what the options is paying. Now, one downside to this stock as opposed to the other 3 is that this one actually offers only monthly options. So as you can see here, you don't have weekly, you don't have bi-weekly, it's straight monthly. So what we're going to do, we're just going to use September 19th, and that's going to give us 48 days. We're just going to round it up to get a decent picture of how much it's going to be if you want to compare apples to apples. So at the 80% chance of profit, that's going to be paying us $6 or $600. Our ROI on this is going to be, once again, you're going to divide your $6 by your 275.9, and that should give you around a 2.2%. Now, although it's 2.2%, remember the expiration is monthly. So this is about 48 days to expiration. So what we're going to do, we're going to divide that by 2. And if you divide it by 2, you're going to see it's either going to be paying the exact same 1% or 1.5% as United Health. So there you have it. The stocks I'm looking at right now that presents great opportunity that I'll be making a decision on which one I'm going to be using in order to make consistent income is going to be Oscar Health, Merck & Company, United Health, and also Elevance Health. Now, with these 4 stocks, we need to make a decision which one is good. If I had to choose and use these stocks in my portfolio, the number 1 I would be using is going to be, maybe you have guessed it by now, is going to be United Health. I already do have options on United Health, and now that the share price keeps dropping, I have decided to go ahead and actually buy shares in order to hedge my position. If you guys don't know what to hedge your positions in, just let me know in the comments below. I could go ahead and make a video of how to hedge your positions, or it's actually one way to manage your risk. Now, this is all good and well. The share price is a bit of a deterrent for those of you who are trading with a small account. So my second pick in this is going to be none other than Oscar Health. The reason why I'll be going with Oscar Health is because the ROI on Oscar Health is 5%. So the reward is definitely worth the risk. Also, if you are trading with a small account portfolio, then Oscar Health is going to be a way easier for you to trade at $13 per share as opposed to United Health at $237 per share. So there you have it, investors and future investors. These are the 4 stocks that I'm going to be looking at, and in particularly, I'll be adding some more United Health to my portfolio, and I'll be adding new to my portfolio, Oscar Health. Now, if you guys are interested in seeing the option strategies I'm going to be using on those 2 healthcare stocks in particular, just type in the comments below, just type in healthcare, and I'm going to go ahead and show you the entire thing when I go ahead and buy it and the option strategies I intend to use on it. Now, hopefully this video was not too long, but I just wanted to bring those healthcare stocks to your attention because, like I keep mentioning, in the stock market is overpriced right now, and the only opportunity there is to make some real money, some consistent money, is going to be in healthcare. Now, for those of you that made it to the end of the video, you guys are the real investors and future investors. If you haven't already, this is going to be the perfect time for you to go ahead and like the video. Remember to subscribe to the channel and hit that notification bell to get more alerts whenever I drop these videos. Now, the most important thing is that you should definitely go ahead and share this video with someone you know that's struggling to grow a small account portfolio. The whole point of me making these videos is I'm trying to help as many people as I can make income from options, and most importantly, help them grow a small account portfolio so eventually they can probably get away from the 9 to 5. Now, until the next video, keep pushing your investments.